Yes, people, salams. Welcome back to the channel. Okay, so we're on a Financial Times article. More than 100 big supermarkets are at risk of closure from UK business rates rises. Okay, let's see what's going on here. So, over 100 large stores run by the UK's top supermarket chains are at risk of closure because of the UK government's plan to increase business rates. That's essentially going to drive up the costs for a sector that's already had the brunt of the national insurance contribution increases, increased employment taxes. So, about 50 of Sainsbury's 600 supermarkets will potentially become unprofitable as a result of higher property charges, according to people in the industry. For Tesco, the UK's largest private sector employer, the changes would tip tens of stores into the red, according to a new senior figure at the company. Ministers are planning to increase business rates on properties with a rateable value of more than £500,000, the top 1% of retail stores. The intention is that it will fund the government's plan to change a temporary discount for small retail and hospitality businesses. Okay, so basically, this is going to mean that businesses, especially those that are trading from premises with a rateable value of less than 500,000 into a permanent one. So basically, it's going to fund the government's plan to change the temporary discount. So Sainsbury and Tesco, which generate net profits of 420 million and 1.2 billion respectively last year, may be better able to weather the impact than their more heavily indebted rivals, Asda Morrison's. The changes will threaten the viability of 30 Morrisons supermarkets out of a total of almost 500. Almost one insider said Although one insider said this would not necessarily mean these outlets close as a result. Meanwhile, almost 90% of Asda roughly 600 supermarkets would be affected by the business rate increases, said a person familiar with the company. Supermarket executives have also been urged that Labour's plan to increase rates will not impact Aldi and Lidl, which typically operate smaller, less valuable stores. Obviously, that's going to make him even more angry, potentially. Property experts at Colliers estimate that less than 10% of Lidl stores would be impacted by the proposed changes. Tesco, Sainsbury's, Asda, and Morrisons all declined to comment. Last year, Morrisons chief executive Rami Betley urged the government to stagger the avalanche of costs bearing down on retailers. The sector, which employs 2.8 million people, has been hit disproportionately by increase in employees' national insurance and minimum wage. New businesses levy for larger stores, which employ 1 in 3 retail workers, will be announced at the autumn budget later this year. Business rates have long been a bugbear for bricks and mortar retailers, who complain that the property-based tax unfairly penalises them via a vis-a-vis their online counterparts. So, the government has pledged to fundamentally reform the business rate system, and it contends that its proposals will increase the business rates taken from the majority of distribution centres used by online giants such as Amazon. Industry lobby groups argue the government's focus on large stores will penalise supermarkets and department stores, which can both help drive footfall to the high street. Ken Murphy, chief exec of Tesco, said last month, reforms as proposed do not meet the original intention to rebalance the burden of business rates to be fairer and support town centres. We are creating a fairer business rate system to protect the high street, support investment and level the playing field, the UK Treasury said. We intend to introduce permanently lower taxes rates for retail, hospitality and leisure properties from next year. Unlike the current relief for these properties, there will be no cash cap on new lower tax rates. There you have it, people. So these business rates hikes by the UK government could take out some of the big stores, the larger retail units, supermarkets especially, with many facing a risk of closure due to the increase in the amount of taxes you're going to have to pay. Do let us know what you think about in the comment section below. Don't forget to like, share, subscribe. Catch you in the next one.